We have seen that COVID-19 has definitely accelerated the use of digital and financial services, and we believe that change is going to be here with us forever for both advisors and for clients.
Well, one of the big questions is crypto and Bitcoin specifically going to trade in line with gold as an inflation hedge, which of course has been a long-held thesis around it.
Indians of all people should be able to see the future of digitization. Everything is being digitized. And so I actually make more money by a long way in bear markets. So bear markets for macro people tend to be very interesting. So if you think about a bull market, they tend to be long, and let's say they go up 10% a year. Okay, or 15% a year, something like that. That takes a long time. Bear markets, you probably get a 50% return in a 6-month period. So with the ability to use futures or options, particularly options, you can take hugely leveraged bets in a very fast moving market where the markets have underpriced this risk. So that is where, when you're looking at the indicators, particularly around recessions, it's hard around geopolitical events and stuff because they tend to be more randomized, but recessions tend to be forecastable. And around that, you can start positioning yourself. So we're starting to see it happening in the US right now. We're starting to see the yield curve turning lower. Usually when the yield curve goes negative, a recession follows soon after. So then you're looking for business cycle indicators like the ISM survey or PMI surveys or sentiment surveys to start rolling over and going below 50, it is in the ISM, which tells you the economy started to potentially contract. Those kind of signals, and then a bit of technical analysis, will give you the timing. Now, there's no 100%, there's no certainties in this world. All we do as investors is look for putting probabilities in our favor. And the more experience you have doing that, the better you get at it. And the pandemic was one of those very obvious setups for us in the macro world. The economies globally were already slowing down. We'd had the trade tariff wars with China and the US. Trade was slowing down. Then the pandemic arrives. You knew the whole world was going to follow suit and close their economies. And that looked like, okay, this is a macroeconomic event that we can not only hedge ourselves from, but actually profit from. This is the hard part. It's the same with any technology company. Is it going to get adoption? So this whole world is all about Metcalfe's law. Now, there's no easy Metcalfe's law, just plug it into my computer and it gives me a fair value, right? So you have to estimate it, and you're estimating it by looking at, is the network growing? Are people building things on it? So you make some forecast based on that. So like you'll see tokens like Shiba Inu that retail are trading, and you have to ask yourself, is that really a network or is that just a speculation? Now, in most cases like that, it's just speculation. That's fine. People want to speculate, do what they want, but you're not going to build long-lasting value. So over time, they trend to zero. What's interesting was the other one like that was Dogecoin, which was this joke crypto that everybody found as a meme, and they liked it. It was kind of fun, and it's kind of a bit weird. But a lot of people invested in it. And so this was looking like it was a potential disaster in the making. But then Mark Cuban, a famous US investor who owns the Dallas Mavericks, he said, you know what? If you guys all own it, we're just going to accept it as payments for anything to do with the Dallas Mavs. And then Elon Musk said, well, if you guys love this, we're going to use it too. So I think Tesla's going to end up using it. And so now what you're creating is the applications layer. So usually when you have currency weakness, you have higher inflation. And India's always had relatively high inflation. Over time, it's been coming down. And, demographically speaking, it should get lower. And we've seen interest rates in India trend lower over the last 20 years. Much like they have in the rest of the world, but they're still higher than the rest of the world. But inflation has been generally higher than you see in the West. What's interesting is cryptocurrencies are international products, and they tend to be anchored in limited supply. So Bitcoin has only 21 million Bitcoins that ever be created. So you have a digitally scarce asset, kind of like gold, but it fits in this new digital India world. where all of these things can connect easily. People are used to wallets and transactions and those kind of things. So it allows you to put savings in something that doesn't get devalued over time via inflation or falling. All people should be able to see the future of digitization. Everything is being digitized, and money and all of the infrastructure rails of the financial system and the internet is all going on blockchain. As you know, being a trader, it's all about position sizing, and it's all about risk appetite. And you have some savings and you want to take risk because you don't have as much as you'd like for the future, but you've got a good job. Go ahead, take the risk. Make a calculated, thoughtful risk, not just buying an option and hoping a stock goes up. But if this is your thesis that cryptocurrencies are going to go from $2 trillion to $200 trillion, which is my thesis, I think it's the biggest opportunity I've ever seen. And it's going to be the largest wealth accumulation in all history in the shortest period of time. The network adoption currently for crypto is growing twice the speed the internet did with the same number of users. So back in 1998, the internet was growing at 63% a year, had about 500 million users. Crypto has about 500 million users now. It's growing at 113% a year, which means it gets to 1 billion people by next year or the year after. Should we be a buyer of the dips or a seller of the rallies? If we are in a secular trend that is exponential in nature, then a 50% drawdown is a hell of an opportunity. And you can either be slightly risk averse, in which case you put a small portion of your portfolio, because this is a 70% volatility asset.
Yeah.
So fine, then put 3%, 5% of your portfolio and treat it like an option. It's not going to go to zero, particularly if it's a big one like Ethereum. So maybe it falls another 50%. So can you lose 2.5% of your portfolio? Fine, that's not a problem. But if you're young and you're into technology and you want to take a bet on the future and you've got a steady job and you can afford to take a bet, go for it. Anybody can create a coin. Like anybody can create a startup and say, I'm the new fintech solution for India. 99% aren't worth anything. Okay, so this is like VC investing, but you've got big products like Ethereum, which is now like investing in Google 20 years ago, right? Why are these other tokens? It's straightforward. Bitcoin is incredibly secure in how it's constructed, which is proof of work. You have to solve the algorithm to mine Bitcoin, and you're protecting the network, and it's slow. And it's not very good to use for high input things. Now, people are building layers on top that do that, but basically the world's moved on quite fast. But it's incredibly secure, and there's never can be more than 21 million. It's a very understandable, unique thing, but it's a bit slow for some applications. Ethereum, incredibly adaptable. It's an applications layer tool that you can build on. So fantastic. Problem is the network is so in demand that the fees of using the network are high. And also it's still not fast enough for some of the really crazy fast payment systems we need. If we think of the Internet of Things, where all of the everything digital around us is streaming stuff, we will have streaming payments. Ethereum cannot handle that. So most of these other what called layer one chains solve one of two things. They're either faster or they're cheaper. But they all come with a trade-off, which is they're more centralized, so they're less secure. All of those are solving different things. So then again, we look at them and saying, well, who's using these? What's growing? So we saw a lot of developers building on top of Solana. We're seeing interesting network growth in Terra Luna and AVAX. Those are the three that we've seen. Now, will that last? Because Ethereum's about to go through some changes that should make the network cheaper to use and maybe faster. So do we need these other ones? We don't know, but this is these are the bets we can make, is one thing versus another.